Good day all. Ira Epstein with your financial market wrap up, and actually it's the opening of the evening market, and we are now on March 10th. This is Tuesday, about 5:40 p.m. Central Time. You know, we keep talking about the packages that the president's going to let out for the American people. What would be nice is coordination with our G20 partners too. We know Japan's talking a package, Italy needs something, the UK's got its own issues. I'm just wondering at what point that happens. The bigger story to me is the obvious that's going on. You get markets that over a weekend get this coronavirus news. They go into a state of shock from it. They recover midweek. They trade around, and they seem to then have to go through the process again. And unfortunately, I don't see the process ending. We've been focused very much on Italy, where the whole country is now on a state of lockdown. In America today, New Rochelle has the National Guard surrounding the city. They'll bring them in food and so on, but they want to keep the people there, if you will, quarantined because of such a high breakout of the disease. Where else is it going to happen? We're only at the tip of the iceberg. If you're watching, we've got about 1 million test kits now out in the field at the state areas, commercial organizations that can work with it, and we're going to start seeing the test results. And as the government is telling us, there's going to be a lot more cases and a lot more issues. That doesn't mean that everybody gets this, but it's something to watch. My wife went on an airplane today. Figure that one. She took the picture behind her. She figured, she was doing a count, about 85% of the plane was empty. Give you an idea? And that's normally full to the brim plane. I'm not going to tell you where she went. All right, markets got lower highs. You can see the break intraday was pretty sharp, and the market did get a recovery because we're hearing that the president's going to do some payroll tax relief if he can get that through. He's going to do other events if Congress will let him. You've got to remember, this is still a year where we have the big election. And as nice as everybody wants to be, nobody works together in Congress. We've seen 4 years of this. So when I look at the market, okay, we get a bounce, but it didn't change anything on the chart. You still have the lower highs, lower lows. Maybe the market wants to get a bounce here, but I don't see a big change on the chart. I see a lot of resistance. I see the 18-day average got under the 100, and it's making a run, as I told you, at the 200-day. Now, when you get these crossovers, a lot of algorithms look at them, and they're sensitive to them. Then when I look at the Bollinger Bands, I get why we bounced. This is how the market looked going home Friday. Where's the Bollinger Band? You're back up to a key average, the 200-day. If the market breaks, there's your test. You normally bounce away from it. I'm with that. First challenge, you bounced. Where's the change in trend? I'm not seeing that at all. In terms of momentum, I get it. We're oversold. We are oversold. It's not an embedded reading. It's just an oversold, and you could get a bounce out of that. But there's very strong resistance between the 200-day and the 18-day average and the 100. Just keep that in the back of your mind. Big resistance. To get the NASDAQ back over the 200-day average, why not? This is a key number. And this market's been one of the strongest of the markets, and to see it bouncing from there, fine. But I'm very concerned with the resistance between the 100 and the 18, and I don't see anything bullish. I see an oversold market that's hit another set of targets again and bouncing. That's what I see. In the Dow, now you've got another bad factor. Let's go back to this. This is how the market was yesterday. Now you get your bearish crossover. The 18 today on the close got under the 200-day average, and it's dropping away on it. Oversold, I get it. Bounced off the lower Bollinger Band. I'm sorry, I just don't see anything here that's yet constructive on the upside for any length of time. And unfortunately, the Russell is embedded. Look at that. That means on these rallies, until that red line closes over 20, I think the pros are waiting. You've got all your bearish crossovers. I'm just not in that bull camp. In the VIX, okay, you got over the upper Bollinger Band. Here's the market on Thursday. Here's your reaction, as we know from Monday when everything came crashing down. Today's a day where the market's going, okay, we're pulling back into the Bollinger Band, but you haven't changed anything. You're overbought in an uptrend, paying attention to not staying more than 5% of the time outside of the algorithm called the Bollinger Band. That's what it's supposed to do. In T-bonds, what I don't like in this market, number one, I want to move from the March into the June. So that's the first thing we're going to do. Second thing, you lost your embedded reading. Not good. When you lose it, unless you gain it back the very next day and early on when the next trading session begins, be careful. Often price and the 18-day average make a run at each other. Same in the 10-year notes. And again, I should have changed this. I did, to be honest. And our charting software, not the chart, the computer did a restart. It's too hard to do all these charts just at the last minute. Here too, I'm very nervous. You lost the embedded reading. So if I'm a bull, these are all signs that more than be careful, might be an opportunity to take some money off the table. That's up to you. As a chartist, take the name off the chart. You lose that, and I have a different thought process. Same in the dollar index. You're losing the embedded reading, okay? It's got to get it back right away. Now, it's different in the dollar a little than these. These are down at least 1.5 points there. The dollar was 0.4. That's all I'm saying, but I'm not liking what I'm seeing. Eurocurrency. The market's got the embedded reading, and it too is trying to lose it. That's not a good sign. Got to be careful here. These markets might be ready to give us a bit of a reversal, so it's a warning sign. Same in the yen, you lost your embedded reading. So the streak to the upside has weakened, and it might have come to an end. It might have overdone itself. Same in this market. You got to be careful of all that. Then we get to Bitcoin, which bounced away from the lower Bollinger Band. What's my theory? First challenge of a Bollinger Band is where pros take money off the table, on the upsides or downsides. That does not mean they have to get out of all their position. They could use trailing stops. I don't know how many contracts you trade, but people sometimes build into positions and they work out of positions. That, everybody trades different. In the WTI, you're still very much in a downtrend into a state of collapse between WTI and Brent. You're getting your first bounce after a straight down decline. And all you've done on Brent is climb back into the Bollinger Band area. See it? That's all you've done. WTI fighting to do the same thing. That huge break, you're moving to the right-hand side. But there's no sign here that I'm seeing that these markets have to be through with the downside. Gasoline. You had that huge drop, and now you're moving to the right-hand side. That's all it is. It's certainly not flashing, oh, things are good. You had a difference in that gas. This I pointed out yesterday. You had a downtrend. The high, if you get over this high, you're no longer in the bear camp. Boom, you're over. Resistance, upper Bollinger Band. But why is it railing? It's not that cold outside, is it? It's because the price of oil is so cheap that you're going to force less production. Less production, what's one of the byproducts out of a well? Natural gas. So maybe the market has a shot at getting back into balance over time, and the traders are sensitive to that. So that's what I'm looking at in the marketplace. This is where you're at as we're finishing things up. We'll see how everything plays out from there. Want to remind you about my own research. Not mine, but this is our firm. I'm part of Linn Associates. We write on a whole host of markets. Throughout the day, the staff here is writing reports through the evening, and they're covering every market you can imagine. I mean, they're in all the different sectors, be it the soft markets, be it the financial markets, interest rates, the VIX. We talk about everything. If I walk through the office, you have no idea. Walking through the office is a challenge. Everybody wants to know what you think, or I want to know what they think. It goes every which way. These guys are good at what they do. At least I think they are. So if you trade any of these sectors, well, you're going to find our information might be something you want to look at. And it's not just futures. These people write about the option strategies, throw out ideas on them, ideas in terms of what a market might do, one way to play it, so on and so forth. I'm a futures specialist. I'm really not an options trader. A lot of people like options. I'm of the other school of thought. I find that most time the option trader loses, where Futures, I don't know, maybe they lose there too. If you don't know what you're doing, you get hurt. And the whole key with all trading, I don't care if it's options or futures, what's the key? Have a game plan, have a discipline, control your risk. If you can't do that, you don't belong in the futures game. It's high risk. There's nothing low risk about this business. So if you'd like to find out more, go to our website, sign up for our free offers. When you get to it, you'll see it on the bottom right. You can click up here. If you're watching me on YouTube, it'll take you there as well. I'm Ira. You have a good day.